Welcome to another Wall Street Informer production on WSI TV.
Welcome to weekly market overview. Date is October 2nd, Sunday, after the market closed on the 30th of September. Following on from last week's commentary, here's the very big picture there, going back to 1998. We always start off by looking at this just to remind ourselves that the stock market does move in cycles and does have down phases as well as up phases, of which we're fairly overdue for a down phase, but there's no guarantee about when that's going to happen, and that's the real trick, and that's one of the things we're looking at here every week. There's the sort of over the last 5 years chart of the S&P 500. It's looking, fairly healthy. But as we discussed last week, the thing I think that's contradicting that is the all the stock exchanges in the New York Composite, is what this chart is, bundled into one, doesn't show the same picture. What we see here is at the peak, it still has not got an all-time high for over a year now. And this is, it's really just one long bear market rally from this point of view. What backs that up is the stock market of planet Earth, this chart here, which is the all-world index, which is kind of every stock market in the world bundled into one chart. Now you can see the peak has not been an all-time high in the world stock market for over a year. So it's kind of unusual territory what it's in right now. It's not kind of bull market. It's not a bear market. It's kind of like a purgatory in between heaven and hell, and it's certainly torturing a lot of traders in that respect, as purgatory would. So zooming in a little bit. Now, I want to make an important point here because I had a question in the week, and it's a very good question regarding the system that's taught, where I talk about what's a bull market, what's a bear market. Because just this week you could argue that, well, the S&P 500 now, the 40-week is over the 70-week line. The RSI is above 50%, 55%, and the price is certainly above the 70-week line. And on some of the systems that you might have learned, that might indicate a bull market, except one thing I do when I constantly update this system, which is why it's an important thing to watch these weekly videos, is that I also want, and this is what I taught at the seminar list recently, is I also want to see 6 months of the blue line trending in that direction, moving in that direction. When it is definitely got a lot there, and it's but still got a bit of a kink in it there. So there's some consistency. And as I've been pointing out, what I'm also going to say now is that I believe, just based on the charts I've just shown you of the NYA, the New York Composite, there is that I think the S&P 500 is a bit of an anomaly right now and a bit of a bubble. I don't think this chart's correct. So what I'm going to say is, look, okay, bull market when the NYA backs it up, and we're not in that situation yet, with the blue line over the red line and 6 months of an upward line. So I think this is why people look at the composite index chart, is because it keeps you honest and doesn't let any individual index like the S&P 500 create anomalies or non-confirmations, if you like. And currently what we're seeing is a non-confirmation. The S&P 500 is kind of doing its own thing. This is what's keeping us grounded here, is by looking at this chart. So that's the very big picture. I still think this is very much a kind of very overblown and drawn out bear market rally, because it has not got an all-time high yet. In a bull market, you keep getting all-time highs over a period of time. We've not seen one for over a year. I think this is a central bank engineered delaying tactic until the US election is over, and that's only a month away, thank God. So let's look into the short-term picture, though. And this is an interesting point of view, because it's been a very confused market for a while, searching for some direction, and that is starting to show up in the chart. In this, what I'm going to draw for you now is called like a funnel, or a wedge, some people call it, and that's one line like that, and we draw another trend line like this. looking something like that. And so we get this wedge pattern here, and it's while the market's sorting itself out, figuring what it's going to do next. But here's how the rule works for this, is that when the next closing price outside of this wedge shape is going to tell you the direction the market could move in. So what's going to happen is, if it's either going to break to maybe 2180, close somewhere around up here, that's going to be a bullish sign for the weeks ahead. Or below, though, if it gets below that line there, maybe to about 2150 area and lower, then that probably indicates lower prices ahead. So pay attention to those prices this week, and you can see that wedge, and if it breaks out of it before next week's commentary, you'll have a clear indication of what's likely to happen next. So still very confused, the market, so it's hard to say what the direction is, but you now also have a mechanism to see, let the market tell you which way it's going to go.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.